Hello and welcome to Profiles in Risk. This is your host Tony Cañas, switching to my radio voice. And tonight I have with me the prodigal son or the prodigal older brother, no stranger to this show, the original voice of Profiles in Risk, and now second time startup founder, Nick Lamparelli. Nick, how's it going today?
It's going great. Um, love feels weird. It's like being a member of a baseball team and then you get traded and then you come back to your original stadium.
That's a good way to put it. I've got to say, you traded yourself.
Yeah, yeah.
But yes, I
I
completely get
left for
it.
free agency and then
Uh,
I'm back visiting.
if you ever want to record a bunch of episodes, you're more than welcome to. I know you're more than busy enough. So anyway, for those that don't know, Nick started Professor in Risk. The name of what was his idea, and then he ran it for I don't know 150 episodes,
Yeah,
and then he gift wrapped it and handed it back to me. And I have simply continued carrying this thing,
it's
and
better.
nowadays
It's better.
I don't know if it's better. It produces a lot of business for my recruiting practice for sure, and I have a lot of fun making it. So Nick, you've come back as a guest to talk about different topics. Uh, so you founded an insurtech called Rethought Insurance, which is revolutionizing flood, and you were there for 5 years, or almost six, I think. Uh, and now you are at your second startup. Uh, what is Green Shield Risk Solutions?
Yeah, so I co-founded Rethought. I can't possibly take all the credit for it. They have contributed just as much or more than I did, but it was bringing technology to a peril that was very much underutilized in insurance, which was flood. And I think after 5 or 6 years, it's 6 years old now. After 6 years, I think the model's been validated. So all of the naysayers at the beginning, it's like, oh, flood, you can't underwrite flood. It's too difficult, too challenging. Leave it to the government. I think Rethought's doing a marvelous job of showing it can.
Uh,
Um,
so I do have to say I should have said co-founder, and with pretty much every insurtech, it's always co-founder. Like nobody does this by
no,
themselves.
it's
And
it's it's not
also
possible.
also gotta say you left Rethought in good hands, right? Derek
Yeah,
is fantastic, Serena is fantastic. I don't know everybody in the team, but the few people that I know are all people I deeply respect.
yeah, no, great hands. Better hands. You got people like Serena and Derek. It's in really good hands. Um, towards the end, I began to notice. I think a mega factor. I'll call it something like that, which was became it sort of became obvious to me that there's just never going to be enough insurance capacity to cover natural catastrophes, right? Like it is going to be always volatile, and you would think that it's like, well, yeah, of course, rightfully so, right? Like these are big disasters that occur, and when they do occur, there are big insurance payouts. But in the process during rethought, where we got really close to the underwriting data, really close to the decision making, you can see that in certain situations it's like, you're looking at it, you're selling a policy, you're kind of waiting for a claim to occur, but like that property could be defended, right? Like there could be things we could do to prevent the water from getting into the building, and there are other entities that are doing things like that, but no one's really gotten any traction around that. So, but I think of a company like FM Global, for instance, who for 150 years has sort of pioneered the concept of combining risk management and insurance. Like, what is our role, Tony? What is the purpose of insurance? And I think the academic answer is like, it's a funding vehicle to make people whole. Like it's a risk transfer vehicle. But I think there's something deeper than that that's at play here. And I happen to think that insurance could occupy the space around beyond risk transfer, where our role is to reduce the total cost of risk. It's a very much different concept, right? So the idea is that if you have a property, the cost of risk for that, and that's everything from losses that could occur to it, the insurance premiums you pay on that. So everything from risk prevention, risk mitigation, to risk transfer, that whole chain. What is the total cost that's and potential losses that exposed to the property owner? And I was like, we have that data, right? Like FM Global has done that on fire. How come no one has done this on the catastrophe side? It's done here or there in pockets. Do we not do risk management? We do risk management. We do loss control. But there's something fundamentally broken, right? So if you look at most loss control, it's someone submits an application, broker sends it in, it gets bound, and then there's an inspection. And then there are recommendations. And it's always like after a policy's been bound, in midterm, if you send an inspector to a property, they're likely to say, yeah, you got to replace the roof, right? Like something like that. And there's no cohesion to it. Right. And I think that's fundamentally, like, you cannot reduce the total cost of risk unless there's a cohesive framework in order to be able to do that, and cohesive economics, right? There's got to be an incentive to be able to do all of this. And I would say, like, right now, because everything's in silos, it's too broken to be cohesive. So when, a little less than a year ago, I was having conversations with Pat Blanford, was my co-founder of Green Shield, and we were talking about this particular concept and how, like, of course we think we wouldn't do it unless we thought there was a business opportunity, right, to do this. But in the big scheme, like when you're thinking of a startup and you're thinking of like,
hold on, are you telling me that Nick Lamparelli is not a halfway socialist Bernie bro like me? There has to be money in this.
There has to be money in this. If you're relying on the federal government to save the day, that ain't gonna happen. It's not gonna work.
I'm just being facetious here. I know that we only have a limited amount of time today. Nick and I are politically somewhat distant, so I just wanted to poke the bear on that one. Okay, so
well, the difference is, like, I want to do something effective. That's the difference. Like, I want it to actually work, and I want it to scale. What is the opportunity here? And so if you look at, like, all of the use cases, right? And a really interesting one was Pat, my co-founder, had a home, or was buying a home in South Carolina, and here's the CEO of an insurance company, and even he struggled with getting transparency around the risk, like. He, buying a home in South Carolina, like, he knew going in, it's like, okay, well, hurricanes, like, he knew that. So when he was requesting reports, and he was requesting, from brokers or wherever, and he's asking, like, to try to get some transparency on it, the furthest he could get around the transparency was like, the wind risk is severe and the flood risk is severe. And he's just like, I know that. But what does that mean? What does that mean? What does that mean for me? What does that mean for how I should think about buying insurance? What does that mean in terms of how much risk I should potentially retain? What does that mean in the future? Like, severe, like, it's reflected in my premium severe? What other aspects of this, like, should be transparent to me as the buyer? And sure enough, in the first year of his policy, he got inspected by his insurance company. They came in and said, you got to replace the roof. It rates fair, but we only underwrite to good standard. And now it begs the question, well, what does fair mean? What does good mean? What do you mean you have to replace the roof? And it wasn't for a lack of, like, wanting to replace the roof. It was just like there's a tension there in the process around, like, replace the roof or we're going to cancel your insurance. There's a conflict, right? And so I think that's sort of the problem that we're setting out to solve, is if we want to reduce the total cost of risk, that's going to require information around prevention and mitigation. And the typical buyer of insurance has no idea about what to prevent, what to mitigate, what it's going to cost, whether it's going to make a difference. It's not fair. And I'll go back to the FM Global model. FM Global has, highly engineered solution around fire, right? So they send engineers to a site and they say, here are the recommendations, and they kind of prioritize them. And if you do these things, you will qualify for our insurance, which the incentive is like you get the best fire rate that like exists for an industrial facility or a factory. And so that is clearly like I think a marvelous model, because you have now everyone's aligned. Like if you go through the process and go through that risk management, and then you get an FM Global policy, you both want the same thing, no claim, and you're both in it together, which is the entity that has a lot of the data and the analytics and the information that can guide the business on what to do, when to do it, those sorts of things. And the entity on the other end that's like, okay, we're going to do those things because the information is very useful and we would like to remain a partner with you going forward. And you're incentivizing us to do this. There's a return on our investment by lowering the premium. It's a really solid, positive feedback loop that occurs with that particular model. And so essentially Green Shield is, how do we replicate that model in natural catastrophes and broaden it out so that more businesses, more homeowners, more property owners can benefit from that.
Okay, that was a lot. At the very beginning, you reminded me of the book Understanding Catastrophe Insurance by Caroline Kuski, and you're probably the one that made me aware that book existed. And then I had her on the podcast, episode 393. So for the listeners, if you want to learn more about catastrophe, great book to read and great episode. Okay, so green risk launches, Green Shield risk launches.
Yep.
To solve this problem, to align the incentives, and you guys get a product out in like 3 months, 4 months, something like that. Like super quickly, you've got something out in the market, right? If I understood correctly.
Yeah. So let me make sure I frame it correctly.
Okay.
So the way we've sort of structured the business is we have, so there's going to be insurance solutions. What you would prototypically think around MGA, but framed a little differently. So this was one of my one of the learning elements that I saw during the Insurtech. All of these firms running to be MGAs, right? Like, oh well, we don't want to capitalize to be a carrier, so we'll be an MGA. And the problems that arose with that, which is when you're an MGA and customer acquisition costs are still very high. And when you're an MGA and you're spending so much time and effort to try to get a pipeline of business, if it doesn't fit your capacity, that's it. It's gone, right? So that's the model of the, everything from, the public insurtechs, not naming names. That's a problem that they face, right? Is they spend an inordinate amount of resources to acquire a customer. And if that customer doesn't fit their capacity profile, the game's over. I prefer the Geico progressive model, which is we want to find customers who are interested in lowering their total cost of risk. It can be our capacity. It can be someone else's capacity. We're indifferent to that. And so our model is going to be, we will function as more of a wholesale model, right? Where we will have appointments with strategic partners to deliver their products. We will create our own internal capacity. So there's the MGA there, but the goal is, as we go out and create, our goal is to create this as large of possible scale, right? Which means we don't want a situation where a prospect comes in and we can't find a home for it. We can't find the insurance for it. So we're indifferent around the capacity. The front end of the business model is really around which prospects, right? So what are the target markets that we think we can go after and make a big dent in this? And I think more importantly is we go after it with the analytics and the loss control first, and then the insurance solution. So yes, we are live. We have insurance solutions, but what's coming up rapidly right behind that is a kind of an outreach with analytics and loss control, and a big focus on the markets that you hear, Florida, California, the issues that they're having, where you have homeowners and property owners that just can't get insurance, sometimes at any cost.
Okay. So it sounds to me that for property carriers that do a lot of business in those states that are getting almost impossible to do, right? The Florida, Gulf, the Gulf states, South Carolina, that kind of thing. That's exactly who the perfect partners are for you guys. Some of those are the perfect partners
Yeah.
for you guys.
Yeah.
Okay. So if I am one of those carriers, why do I want to partner with Green Shield Risk? And I think it's pretty obvious, but just so it's super clear.
Yeah, because we're gonna be bringing a higher standard of analytics and a higher standard of loss control. So essentially, our goal is to reduce risk. So uh, it's the typical appointment process is someone gets appointed and then they start selling policies. We don't um, we don't view our long-term value to those partners in that way. We view our long-term value around, hey, we're going to have a mechanism to reduce the risk before it lands in the bound pile, right? So we'll be able to like strategically target areas. We'll be able to run the analytics, right? So a big part of our model is like leveling the playing field around information. One of the reasons why we think we can get, back to the FM Global model, it's a partnership between the corporation and FM Global, right? Part of what we think we can do. This isn't for everybody. This is not going to be for like most homeowners would not really be interested in this model. The homeowner we want is the concerned homeowner, the concerned property owner, right? Price is not the driving factor. Coverage is a big factor, but if there's a mechanism for them to reduce risk, that's more important to them. What they want is a healthy property, a durable property, and they are willing. We want the concerned property owner that's willing to invest in that in exchange for the information required to do that correctly, and for the insurance capacity combined, right? So it's linking those three. So most insurance carriers would probably not be good partners for us because there's no mechanism to be able to do something like that. So long term, that's what you're going to find. In one of the partners in what was announced, right? One of the areas we have capacity in, like we're forging like a really strong relationship with them. Like, yes, it's an appointment now. We can sell builder's risk now, but going forward, our ability to actually influence their business, I think, could be off the charts. You don't see that. Like, you don't see it the other way. Like, usually you have MGAs and carriers or whatever, and the relationship is they're separate entities. Like one, they're both leveraging the resources of the other. Our goal is to have that, but also back to the carrier, we make them a better carrier. We make them more attractive to their partners, their reinsurance partners, so they can get more capacity. So just by dint of them working with us, they become better at what they do. We think that's the level of analytics and loss control and the way this model could work that I have not seen anywhere else.
Okay. Okay. So you create a win-win-win, right? The
Yeah.
homeowner before couldn't get insurance at all, or it was getting ridiculously expensive, and probably heading towards being uninsurable. You help them mitigate the risk; they become insurable. the carrier was having a very hard time being profitable in those areas. Uh, should be profitable. Uh,
Hopefully.
so yeah, yes, or increase their chances of being
That's right.
profitable
Yeah.
in just very, very, very hard areas. Okay, how uh, and this might not be completely worked out, and it might be different for different products or channels you end up making. How what's the revenue model, right? So does the carrier pay you a piece, or is the homeowner paying you for the information that helps to make the home more insurable, or what's
Yeah.
the revenue model?
Yeah. So I'm a fan of multiple streams of revenue, right? So I think one of the flaws in the insurance revenue model is the complete reliance on premium to fund everything. Um, so you know there are a lot of companies, Tony, that have loss control, right? And predominantly loss control is kind of buried into the premium, right? Take a
Hmm.
large
And, and it's usually commercial lines, right? Like it's
usually.
rare, yeah, like maybe
No,
high
but you
net worth kind of thing.
yeah, high net worth. I think on the personal line side, there's definitely loss control, but it's embedded in the premium, right?
Hmm. Yeah, 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 yeah.
So in an admitted product, there's not much margin there to be able to do that loss control. So loss control is superficial, right?
Okay.
It's not accomplishing what it's meant to accomplish, and we're seeing that also in the commercial side either. So you have a very high standard set by a company like FM Global, and you might get a few that are like have the resources to be able to either get close to that, do something like that. My judgment on the industry is like most of it is superficial, and it's almost a waste of time to do it because the cost of sending an inspector out and doing the inspection and writing a report, like you're talking hundreds of dollars, and it almost doesn't make any sense. So um, we I I like to structure multiple sources of revenue. So when Pat and I sat down, we were kind of mapping this thing out. It's like, well, where can you generate revenue outside of the insurance premium, right? And so it's fundamentally a couple of components of our model, which is we are building what I think is going to be a superior analytical model to create risk transparency, right? So not just like a model that's going to output the things that like an underwriter needs, but the stuff that's going to output that's going to get a broker that can help a broker convince a property owner to replace a roof, kind of risk transparency, like that sort of analytics, and the loss control that's going to go along with it. That's going to tell them here are the things you need to do at in the priority that you should be doing them, tying it back to the analytics that say, if you do these things, here's the discount, here's the credit, here's the reduction in risk that you're going to get. We're going to tie those two pieces together. And we think those two categories are revenue generating, that they're in the ecosystem between insurance carriers, MGAs, that listen, my personal opinion is I don't think they do cat very well at all. I think most of the firms that are out there do a really poor job in terms of analyzing cat. I think we can do better. And so that our goal will be for those entities, which I've lovingly termed analytics as a service and loss control as a service. It's, hey, we're building this thing and we can do it better than you can. We can do it more economically than you can. We can generate better insights than you can. You should just outsource that to us and let us do that. With or without an insurance relationship, we can just help you in that particular way. And it's in there where we think there's the business model, Tony, that now puts everything kind of on steroids, where you have the analytics, you have the loss control. Oh, and we have an insurance solution. The holy grail is when we can combine all three of those. And I'm a big fan of FM Global. I'll just keep mentioning them. Like that's kind of part of their model as well. If you look at what it is that they do, I mean, how many avenues does FM Global they're actively in the fire business? you know, when you're installing a sprinkler system, it's to FM global standards. Like they've set the standard on that. Why has no one done that or kind of coordinated all of that in the cat space? And I think that's what it is. That's what it is we're trying to do. So the revenue model will be, yeah, traditional insurance. We will have an insurance solution, and it'll have the same sort of profit and loss kind of dynamic to it that a traditional insurance policy or insurance program has. But we'll have these other elements that will be made available. So, you know, if you're a startup MGA, right? You know how hard it is, Tony? I've now done this is my second time. Do you know how hard it is for a startup MGA that's exposed to cat to get cat information? I mean, models cost hundreds of thousands of dollars. Policy management systems cost hundreds of thousands of dollars. When I advise people in new entities that are coming in, I always advise them not to do an MGA because they can't appreciate what the costs are going to be. It's hundreds of thousands of dollars just for the supporting stuff. We think that between the MGAs and brokers and wholesalers and even insurance carriers, most of them should not even be doing cat. They're not good enough. The overhead is really expensive. The talent to support those models are really expensive. They should just outsource it to an entity that can do it better than they can. And I would say can probably generate better insights than what they're getting, which is plug an address in a model and get some numbers out. You can use that and that's valid, but what if you could use it to get more capacity? What if you could use it to target, you know, particular markets? That's another revenue model that we're looking at.
Okay, kind of one last question, and this one will change and change and change, I'm sure. But what's the distribution?
Okay, so that's a good question. Fair. So as the insurance solutions come up, a lot of the distribution will be prototypical distribution, right? I think a lot of the distribution will be. We think we're going to have when the insurance solutions begin to mature. I don't think this is a solution for the entire broad market. This is, we'll call it a niche solution. I think it has applications to a broader market down the road, but I think it's going to be more selective in the early stages. So we don't think our solution is going to be applicable to most agents and brokers. It's going to be select brokers who have clienteles that are concerned to property owners, not brokers who have clienteles that are looking for the cheapest insurance solution. That's not what we're trying to go for. We're trying to go for resiliency, building durable homes, making insurance capacity stretch further. Therefore, prevention and mitigation is part and parcel of what it is we're trying to offer. So for the insurance solutions, it's going to be predominantly agents and brokers that we're working through, but it's probably going to be highly selective. We will not work with everybody. Not everybody's going to want to work with us around that. But I think distribution-wise, outside of the insurance programs, or how to tie some of those pieces in, Tony, I think the insurance product itself has fundamental flaws. I already mentioned that around the loss control and the risk prevention, how it's really just a tool for risk transfer that creates problems. But the 12-month cycle creates a whole other set of problems, right? So if you take a community, let's say in California, property owner the community could do a ton around wildfire risk management. Mm-hmm. A property owner in that community can apply for insurance. There's no mechanism that insurance underwriter can possibly understand around what the community did. All they're looking at is that property. And that's a fundamentally flawed view of what's happening there. And so again, in the climate exposed areas, so let's just focus on Florida and California where the needs are so pressing, could be Louisiana too. The need is so pressing. Maybe the solution isn't property by property. Maybe the solution is we go one layer up and the community itself has to band together to reduce the volatility of the community's insurance. So this could be a Bernie bro. This is where we might unite.
That's
here.
exactly why I have a smirk on my face. The libertarian talking about a community coming together is a weird thing.
But it streamlines the distribution. It's the most effective way. What's the most effective way for a homeowner to get catastrophe insurance in some of these areas? It isn't them negotiating the insurance individually. It's too volatile. They might, in many years, they'll get it, and in many years, they might get a very cheap price, but then all hell breaks loose, the wildfires, the hurricanes, and next thing you know, they can't get anything, right? And so the volatility of that is problematic for the community, and you're starting to see, especially in California, where the community has almost like they've thrown up their hands and said, we have to solve this. So, with that said, how do you create insurance in that kind of mechanism? That's a fundamentally different type of structure that has to be settled in on. And if they're going in that direction, you can't go in 12-month cycles. They can't put all of this effort and time and resources into negotiating a 12-month contract, even if they could get insurance for their entire community, only to have the carrier walk away after 12 months because, they have new management and management wants to reduce their cat risk. Can't happen. Like we have to start thinking in like 5-10 year cycles around the insurance. So on the distribution side of things, I think we are fundamentally trying to think of like, how do we bust out of this, policy by policy, 12 months kind of cycles that are just cannot solve the problem that needs to be solved, which is reducing the total cost of risk and taking $1 of insurance capacity and stretching it further.
Okay, awesome. I've got to say, as we were chatting, I was looking at the Green Risk website and at the Green Shield Risk website, greenshieldrisk.com, and I have got to say, it's an impressive team that you guys have put together, to lead this thing. So Pat, I have not met, but former CEO of one of the Tokyo Marine companies, yourself, Ursula Merchant running operations, and Nick said like running underwriting. Like these are basically a lot of people that I've met along the way and that I respect, and having them all together in one place, it's pretty cool. Pretty exciting. I look forward to see you guys succeed doing this.
Thank you.
Thank you so much for making time, and I'd love to have you back in a year or two to see how the mission has been accomplished and how the tactics have changed to get there.
Yeah, hopefully in a year or two, it's got significant traction, and you'll hear about it in the news.
I am so glad I knew you way back when.
Awesome.
Thank you.
Thanks, man.